So, everyone is talking about the AI revolution, and for good reason. It's making some people an incredible amount of money. But here's the big question. What if this whole thing is a giant bubble just waiting to pop? In this explainer, we're going to dig into the hidden risks that could actually turn an AI stock crash into a full-blown financial crisis. Wow, just take a look at this. Right now, the stock market is even more top-heavy than it was at the peak of the dot-com bubble. So what you're seeing here is the S&P 500, the index that tracks 500 of the biggest companies in the US. And today, just 7 of them, the so-called Magnificent Seven, make up a third of its entire value. That's a massive concentration of risk. If just one of those giants stumbles, it could send shockwaves through the entire system. And this quote right here, it just hits the nail on the head. Look, nobody's denying that AI is a game changer. It absolutely is. The real question, the one that affects all of us, is what happens if the hype gets way ahead of the reality? Is our financial system actually built to handle the shock if AI stock prices come crashing back down to earth? Okay, so here's how we're going to break this all down. First up, we're going to get really clear on what a bubble actually is. Then we'll take a quick trip back to 2008 because there's a huge lesson there. After that, we are going to uncover 3 hidden dangers lurking in today's financial system. And finally, we'll map out what a potential crash could actually look like step by step.
All right, let's dive right in. Is AI a bubble? We hear that word thrown around all the time, but what does it really mean? Let's get to the bottom of it.
So a bubble isn't just when a stock gets hot. It's when the story about the stock becomes way more important than the actual profits. It's when everyone gets so caught up in this dream of the future that they kind of forget to check the numbers today. And when that dream finally shatters, well, the fallout can be absolutely devastating.
Okay, and this is where it gets really interesting. Here's a great way to think about it. Imagine AI is this amazing, shiny new smart fridge you just installed. It's incredible, right? But what if the pipes inside your walls are old and rusty? A leak back there could flood your entire house, and suddenly that fancy new fridge isn't going to do you much good, is it? That's the real risk we're talking about with AI. The problem might not be the tech, but the old plumbing it's connected to.
Right, so we're not just talking about a little dip in the market here. We're talking about the potential for a full-blown systemic crisis. You see, an AI crash could be the spark that ignites a much, much bigger fire, all thanks to 3 hidden vulnerabilities in our financial system. And to really understand how that could happen, we need to look back at the last time the plumbing completely failed.
Remember 2008? A problem that started with some risky mortgages in the US somehow spiraled into a global financial meltdown. It's a really chilling reminder of how just one crack in the system can lead to a total collapse. It was like a domino effect. First, Lehman Brothers went down. Then, literally the next day, the panic spread to a part of the market that was supposed to be completely safe, money market funds. When one of them broke the buck, meaning its value fell below $1, all hell broke loose. Investors yanked out $250 billion in just a few days. The government had to jump in with massive emergency measures just to stop the bleeding. What happened back in 2008 was a massive wake-up call about this hidden part of our financial system called shadow banking. Basically, these are companies that act like banks. They lend money, they create credit, but they do it without the same rules and safety nets. They're a huge part of our economy, but they're also a huge source of risk.
So, what does all this mean for the AI boom today? Well, it means we're staring down 3 major risks that could turn a simple stock market correction into something way, way worse. It's kind of like playing Jenga, but the tower is already wobbly and the table itself is shaking. The first risk, this one hits really close to home for a lot of us. The fact is, we're more invested in the stock market than ever before, and that means we're more vulnerable than ever before. Think about this. Almost a third of all the wealth American households have is tied up in the stock market. That is a massive number. And it means that even if you don't own a single share of an AI company yourself, a big crash could still hammer your retirement savings through things like index funds that we all own. And that just creates this vicious cycle, right? The market drops, so we all feel a bit poorer and we stop spending as much. Then companies make less money, so they stop hiring, or even worse, they start laying people off. And just like that, a Wall Street problem becomes a Main Street crisis. The second big problem is that the firefighters are kind of running out of water. The governments and central banks, the ones who are supposed to put out financial fires, well, they have a lot less ammunition than they did back in 2008. I mean, just look at this. The U.S. government is carrying nearly twice the debt it was before the 2008 crisis, compared to the size of the economy.
That means there's just much less room to spend on things like stimulus or bailouts if the economy really tanks. The safety net is a lot smaller this time around. And that brings us to our third, and honestly, the most complicated risk of all, that shadow banking system we mentioned earlier. It's this vast, hidden world of finance that has grown to an absolutely incredible size, and that's where the real danger might be hiding. Okay, get ready for this. The shadow banking system is now worth over $85 trillion. That is more than 2.5 times the size of the entire traditional regulated banking system. It's like a financial black hole, and we have very, very little visibility into what's actually going on inside. And we're not just talking about one or two companies here. This is a whole ecosystem of hedge funds, these massive private credit firms, and all kinds of other players who are taking on enormous amounts of risk without the same government backstops as a normal bank. If one of them goes down, it could potentially take the whole system down with it. So, we've got the fuel, we've got the kindling, and we have the spark. What happens when it all goes up in flames? See, a financial crash is never just a single event. It's a wildfire that spreads with terrifying speed. It usually starts with a crack in the dam. You know, a bad earnings report, a new regulation, maybe a shocking scandal. Then the floodgates just open. The big AI stocks plummet as everyone makes a rush for the exits at the same time. But the real disaster? That's step 3. That's when the floodwaters reach the shadow banking system, causing a credit drought that could bring the entire economy to a screeching halt. Now, before we all run for the hills, let's just pause and consider the other side of this. What if this isn't a bubble at all? What if the incredible, transformative power of AI is actually worth all this money? That is the billion-dollar question, and it's a key knowledge gap for all of us to really think about and explore. So what can you do about all this? Well, you don't need to be a Wall Street analyst to stay informed. Just pay attention to the headlines. If you start seeing a bunch of stories about AI companies missing their targets, or you hear about trouble in the credit markets, that's your cue to start paying closer attention. Think of these as the canaries in the coal mine. You know, ultimately, this AI boom has put a huge spotlight on a much bigger issue. This isn't just about stocks and bubbles. It's about whether our entire financial system is actually ready for the future. We're living in an age of incredible, rapid technological change, but in many ways, our financial system is still stuck in the past. So the final question is it time for an upgrade?